Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles, my Twitter feed, and to gregschnell.com. Thanks, everybody. Okay, and it is a difficult market when it's uphill all the way. And today we're getting over some China news. Market seems to be reacting pretty well. Caterpillar's the biggest gainer out there, so it's flying. It's up 6% or something. So obviously some optimism in the air that there will be some sort of a deal. We don't know what's in it, but that is lighting things up. I'm also after the Fed presentation the other day with Jerome Powell, where he tried to say 7 times it wasn't QE. And I think Rick said, Tully, the first thing he could say, well, if you're putting money back in, that's pretty much what it is. It's QE. And so the market seems to be getting that underpinning again from the Fed, and the financials would be what would rally on that. So we're going to spend some time on financials today, and I'm looking at the same thing on the Canadian side of the border. They seem to rally, and we've got JP Morgan reporting next week. And the JP Morgan chart is really nicely set up, so we'll cover that off. Now, bonds are rolling over, and I think that's particularly important for those that have been following along for a while here. We talked about the recent high being a momentum high, and then the previous high being a momentum high, and then this high would kind of come up and test it, and then probably fail. And when on that fail, then we'd want to watch for things rolling over. ETFs like XME would probably do well, so that's we're weighted with 38% steel. So when we're coming out of this, if we're going to start to see a rally in all of these material stocks, that's a great place to kind of lean in. And we're seeing things like the emerging markets launch this morning. So all of that adds up to me to say, we're going to get a bid under this market for a short period of time. None of my weekly indicators have flipped as of the recording this morning. And I'll have lots more in my weekend newsletter with gregschnell.com. But the charts that are changing are related to China. And I think it's pretty important that some sort of a deal comes through. And with that optimism, I would suggest, the October low that lots of seasonality stuff points to, perhaps that's setting up right now and we get a nice big bounce out of here, and that would be a great place to be. So just to make sure everybody remembers, next Saturday, not tomorrow, but a week out, we have the Canadian Technician Day, or Canada's Technician Day, live and online. 5 speakers: Tom Boley, Dwight Galusha, Barry Powley, and Jeff Hirsch from Stock Traders Almanac, and myself. So 5 people that will be presenting, and probably at least 2 or 3 of those you might not have heard before, so you might find that a pretty interesting one. And my website, we did send out broadcast bulletin on Wednesday, so that was nice that finally got pushed out. And then we'll be trying to get the payment system set up for a newsletter over the weekend here. So hopefully things are starting to rock. And as always, thank you for watching. I do appreciate it. And we have lots of things that I want to get into, so let's fire it up. The big area I want to focus on today, this banks and financials. And one of the reasons, let's just go to the summary mode. And you can see, this is worldwide. There's a lot of big banks in here, but very few are negative today. And these exchanges have been a great place for people to hide in the financials while the rest of the financials weren't working. So for funds that have to be diversified within sectors, what they would do is they would move to something else, and then as the market rotated, then they would rotate. So what do we see here? We see all of these stocks, the exchanges that were performing very well, starting to pause here, and there's some of the worst performers today. And stocks like JP Morgan are it had broken out and then pulled back just briefly below its breakout level and is now starting to accelerate up. So when we look at these banks, and I'm just going to scroll all the way to the top of the page here. When we look at these banks, some of these are the European banks, and again, they're trying to do more stimulus as well. So we see this starting to get pushed back into the market, and with that, that's a great place for us to at least be aware of and try to get on board. So here's State Street Asset Managers, and you can see that this is big downtrend here, and it's trying to break out to the upside. Charts like this just look beautiful. When we go look at JP Morgan, it's probably right near the top of this list. Yeah, there we go. You see JP Morgan, and if we put a horizontal line, and you can always annotate here on a chart, or you can just use this tool, and this is one tool that I usually like to put it on. And when you do it this way with using the overlay, the line will continue off the screen, and as new data gets added, it will keep the line there. Whereas if you do an annotation, it will obviously stop on the right edge of the chart. Okay, so here's JP Morgan, and what we see on here was this chart broke out, pulled back for 2 or 3 weeks, got down, really just tested the 10-week, and is starting to break back above that breakout level. That's as bullish as it gets for me after going below and coming back above. That's really important. And of course, they report on the 15th. So with that reporting, that's a pretty bullish sign. And we just recently saw the scooter ranking bobble up above into the top area, pull back slightly. If this starts to reemerge, that's really one of the better clues that we have some big action going on in the banks, and I would like to see that. I don't know if it's going to be like 2016 action, but it all seems to be lining up here. And the difficulty that we're going to struggle through is as we come through earnings. I think they're going to be lumpy, and current data not so great, future data not so great yet. The market's already going to start to price in some sort of an economic reversal. So we'll see how we get the earnings coming through in the next 2 weeks. That's kind of the critical period. And as that data comes out, what happens? But I'm expecting that the market will probably rally on the back of this quite well. Again, none of my weekly data has changed, but all of the charts that were set up, and I want to give you an example of something that, here is the XME chart. So this chart is 30. I don't know why all my charts are off the screen. This is one of the things that this has just been in a gentle downtrend, but it's been trying to hold this $24 low or $25 low, and it's been sitting here. Now, the right answer is if we can turn and break out of here, this is very bullish. And if we break below the 25 level, then your stop is nice and tight and it kicks you out. But we also have a really big long downtrend here in momentum that's about to be broken if it does break to the upside. And so it's one of the things I want to watch for, is getting this to break out to the upside. And again, we've got another line here that we can just draw underneath. So we have improving momentum on each of these lows. But the question was, would it break down because of the China deal falling apart, or would we actually get something going? And I think with the with the positive move in Caterpillar and stuff like that, the market's starting to price this in. So this week, for the first time in 4 weeks, we're going to make a higher high and a higher low on this ETF. And so it's that kind of change that I want to watch for, is when does the market start to reverse? And again, we tested the lows, so let's just zoom in here on the last couple of years. So what we want to see is this higher low, higher high, and we're going to close at the top of the bar. That's a really nice kind of reversal that we get off the lows, maybe like we saw back here. And then if we can rally out of here, this would be pretty important. So let's go look at Caterpillar just as an example. And what we see on Caterpillar, the lows were put in August, and we came down, and it's been, last week was a pretty persuasive move down, and it looked pretty ugly. And then this week, it looks like we're ready to reverse that trend. So it's what we call an inside bar so far, with a higher low and a lower high. And so we'd want to keep watching this. But if this can break out above last week's high, then that's a really nice reversal. And we'd be well set up heading into next week. So lots of these things are starting to set up. And again, the full stow here right at 50, that's a really nice place when we get a turn up from there. Usually a rolling over around the 50 level is quite bearish. Any sort of a turn up above 50 or near 50 is really bullish. So when we look across the chart, rolling over, not so good. Here we kept bouncing, so this is okay. And here we came up and failed under 80, and then failed under 80, starting to look weak. Well, all of a sudden we're catching ourselves and turning higher. And that, we haven't really had any upturns on this particular chart, so that makes it quite difficult. So it's that backdrop of this China move that I think I've been talking about for a while, but we've also been watching a couple of different places in the market. And one of the places was the gold charts. And let's just go get some of those. On the group of the gold stocks, what we see here is they've been rolling over slowly, and the consolidation pattern on gold itself has just been like a bull flag. It looked like it was kind of down and to the right for 8 weeks, slightly lower lows and slightly lower highs, but nothing really bad. But this is starting to roll over. This first one here is Eldorado Gold, but it's rolling over, sitting under its 10-week and gently working its way lower. We're also in danger of starting to threaten these uptrends that are going on in momentum indicator. And, just with those kind of clues, it's not a bad place to get out. So I want to keep watching for that setup. And again, as these stocks roll over, then that's a better clue for us. I think if I can just go to, I'm going to use Barrick Gold in Canada. And what we see here on Barrick Gold, so this is the largest gold producer, and we see this rolling over action here, not that positive. It's the fact that the whole group is doing it. Look where the full stochastic is, starting to fall below 50, not really what we want to see in a big uptrend. So as an example, back in 2016, it stayed up here, and this was really the first trip below the 10-week moving average. Now we've been sitting under here for 4 weeks and haven't really made a decision. Today it looks like the decision is starting to be made, where we're down 5%. Gold is breaking down a little bit harder. If we go look at GLD, and let's just zoom in a little bit on that. The point I want to make here is we kind of had three waves up, so 1, 2, 3, and now we've pulled back. But the bigger issue here on gold is we're having trouble getting back through the 10-week moving average. Momentum's coming out of it. PPO's already given us a sell signal, and so the trade that we've had on that's been working for a while in the gold space is now starting to dissipate. If we look at the gold miners as a group, same thing here. They've been under it for almost 5 weeks. I think we had one close in there 3 weeks ago, but it's this slow process where it doesn't seem to be working. Okay, we're going to take a quick break for commercial, and when we come back, I'm going to talk specifically about how the bond market and the gold market were working together, and that's another reason why I expect the move from financials to go from these exchanges and stuff like that within the financial sector over into banks or something more active, and hopefully we'll get a little bit of feedback that way. Okay, be right back. Okay, I'm back, and I'm on my main chart list that I like to work through. And, just one of the things about having your chart list all set up is you can jump in and go catch whatever you want by having your chart lists pre-built. And I find that so helpful. And one of the things that I want to watch for is the price action in TLT, and it's just coming up here. So as soon as it refreshes, we had this big momentum surge and the RSI got to a high. Now we've made one and we're making a lower high. This is on a weekly chart. You can see that the PPO is just breaking down through this uptrend line. To me, I think I've been mentioning it for 2 or 3 weeks now that we want to watch for the secondary momentum high. And as that starts to reverse, that would be a good place to exit the long bond trade and get into things that would work well if the interest rate was going to go the other way. So I'm not so confident that the interest rate is going to go the other way when it was more words out of Powell that, we're not doing QE, but we're actually putting money in, so it's QE. Those things are very adaptive for the market, and they're going to follow that higher. So here we are with the municipal bond fund, and what happened, I like to use it to help me with the direction of the 10-year. And it was sloping up here, and it broke through the uptrend, made a little bit lower low, and is now coming back to back test this high. It's typically what we would expect, just, we kind of break, retest to see if we're going to hold up, and it's starting to break down. So one of the ticker symbols that I use, and I just need to go get my favorites bar to grab this chart quicker, is I have my top 10 to watch, and this is quite a simple chart, but it's a 60-minute chart, so 1 hour. This is roughly 10 days across here. And what you see is the VIX was above the 100 period moving average and gap below today. The S&P 500 was below and below and below. And the real question was, were we going to roll over right at zero here in terms of momentum? This is the MACD for the S&P. And it was making a higher low here, so pretty interesting. We were getting right to this point, and does it roll over this morning or does it break out? And today we're getting the breakout. So it's moving back above the 20 period, 20 period daily, 100 period on this particular scale. But what you'll see is all of a sudden, so the VIX is breaking down, but the S&P is rallying higher, the NASDAQ is rallying higher. Oh, I've still got the Russell on this chart. The TSX is trying to rally higher. It's got a little bit more to go. You can see it's going to make new, 1 week highs. It's going to break out, and then got a little bit to go there. But when we get down here, gold and the TLT have been following each other pretty close, and you can see gold is really losing its power this morning, as is TLT. They're both breaking down below these. So all of the bullish stuff is turning up and all of the bearish stuff is turning down. But look at this move in the US dollar, finally falling down. And as we see all of this change together, it's almost exactly what we would expect. Is the top half of this page breaks up and the bottom half of this page breaks down. We're starting to see a big change in direction, and it's that change that I want to watch for on these bonds. So let's just go look at the 10-year TNX. Here we go. And so this is the monthly chart, and you can see we've been testing these big lows from 2012, 2016, and we've been working in a tight range here. Well, now we kind of made our reversal low. We had a big wide-ranging bar last month, and this month we're already back at the top of the bar, and it looks to me like we're probably going to bounce. Now, when we get on a weekly chart, it's a little easier to see. I think that's this one. And I've got some comments on here. So up at the top, Jamie Dimon said he was getting ready for 5%. And I'm not trying to pick on him. It's a good indicator of sentiment that they thought everything was going to go high. So it literally spent another 2 months going higher, did a false breakout and rolled right over. And it was right on our PPO trend line telling us that it would need a little bit more momentum. So now we have this big downsliding momentum. And if we're going to start turning up right here, this is a great clue that something is changing. In the meantime, guess what happened? Jamie Dimon said they're prepared for negative interest rates. And the Canadian bank BMO said they expected the low rates are here to stay. So the sentiment gets so washed out, and now we expect to turn the other way. So we can see on this relative strength downtrend, it's starting to break. And I think that's a clue. The RSI here on this weekly chart is also starting to turn up. All of these things are adding up together to me to tell me that there's a bit of a shift going on. And it's that kind of a shift that we want to watch for. So when we look at the 5-year here as an example, what we see on this chart is it's in a real big downtrend. Look at the rally so far this week, and the KBE is the bank index, and it's been grinding sideways, but it's having a big week as well. And I pointed it out in my newsletter. If you signed up on the gregschnell.com website, I sent out a newsletter on Friday. On Wednesday night. And what that newsletter shows in there, there's a chart of the KBE and the KRE, so the regional banks and the big banks. And what we're watching for is to see how that chart behaves. And I can show you that chart in just a little bit here. But the idea that all of this stuff starts to rotate as we test this low, look at this much higher low in momentum on this last low, that's the kind of thing we would expect. We got a change in character here. So going back to the start of 2018, our last kick came above this PPO line. Now we've pulled back and it looks like we want to start to take off. So some warning shots came across the bow on this one, but the real clue here is that even though we came down to test the same level, the momentum is not nearly as negative, and it looks to me like it wants to go the other way. So we're seeing it on the bonds starting to show up. We're seeing it on gold starting to roll over. We're seeing it in the financials where the big leaders like the exchanges are all kind of the weakest performers. And we're starting to see the other banks break out. Now, I mentioned that JP Morgan chart looks beautiful for a breakout. That's a great place to look. Just go and see, what is working today to see how that works. Now, the way I do that very quickly, here's the Dow 30, and you can just update this chart. And of course, we can set it up for a week. What has changed over 1 week? And almost everything is rallying here. These defensive ones, Procter & Gamble, Coca-Cola, Johnson's, the insurance company, what are they doing? They're right at the bottom of the list. Guess who's at the top of the list? Home Depot, Apple, Caterpillar, Intel. The semiconductor space is on fire today. I think there was a couple of great analysts pointing out that NVIDIA looks like it wants to break out. It's starting to roll. So we're getting this whole change in tone, and that's one of the things that I've been watching for, waiting for, and finally it's starting to show up. And as that change happens, I think it's a pretty good place to at least start to put some money to work if you haven't already. And on here, this is the emerging markets ETF, and what we see here is this big downtrend for 18 months. Looks ready to break out today, and one of the easy things to do is to use the gallery view. So we're going to put in EEM, VEU, and these are the Vanguard FTSE All World ex-US ETF. So it's going to show us a chart of the rest of the world without the US stocks in it. And when we run this, I particularly love this side-by-side view, but look at the gaps up that these two charts are making out of this kind of 10-day base. No big deal, doesn't sound like much, but you can see the momentum's clearly starting to make higher highs. And look at the big gaps that we see in this chart here. This is some real nice breakaway stuff, moving above the long-term moving average. Same thing on XEU here, trying to really, that's a nice move that's starting to take place there. PPO turning up in both cases right around the 0 level. That's pretty sweet. And so we see this XEU 18-month trend line or 21-month trend line starting to break. Same thing on VEU, so EEM and VEU. And we're starting to see that break. And look where the PPO momentum is, sitting right near 0 and trying to work its way higher. So lots of things on these charts I like. The big setup in the background that we've been waiting for is all of a sudden starting to kick in. And it's so funny because it's literally right as we get the bear market signal on this VEU and the two moving averages where the 10-week crosses below the 40-week to get this bearish cross. And sure enough, that's exactly where the market kind of finds support and takes off to the upside. So I'm actually quite bullish here. I know I've been waiting and waiting and waiting, and I kept mentioning, what if we don't get a China trade deal? Well, what would we watch for? Well, we're getting the clues that are telling us the China trade deal is going ahead. So we have big moves in EEM, big moves in the rest of the world, the US dollar pulling back, and these related stocks like Caterpillar and stuff really starting to accelerate. So that's a nice fit. Again, the other thing, so I have literally on my bookmarks up here, I've got a chart for the TSX, the Canadian markets, the Dow 30, the S&P 500, the NASDAQ 100, and you can just click in on these and see, what is starting to work, which charts are taking off. And here's another example. These gambling stocks might do pretty well if Macau is going to be back on the table. So some places like that are interesting. Here's some Chinese travel company, C-Trip, working pretty well. So you see a whole bunch of different components just by looking quickly at the indexes. And of course, semiconductors are on fire today. They're literally flying. All of the railroads started to make a nice pop, which would say freight was going to start to move again. Here's NVIDIA. This chart was really, really nicely set up. And you can see, let's just scroll that up a bit. You can see that 180 level trying to get through. And if this chart is going to break out, really nice place to look for a breakout. So pretty happy with how the market is rotating as the news comes closer and closer this week. So there's some pretty good help there with the type of rotation we're seeing within the market. Other than that, I think one of the things to watch for over the weekend, if you haven't already, is try to figure out some of the IPO space. I've been mentioning it recently. If they could start to turn, that would be helpful. And if we look at stocks, I'm just going to go over here. If we look at stocks like Work, which is the Slack product, the kind of interoffice communication, you can see that it's been trying to make a higher low here. Momentum is starting to pick back up. We don't have a weekly chart for it because it just IPO'd here in June. But this downtrend is a really nice place to look at. It IPO'd and got up to 41. It got down to 50% off and is trying to rally out of the hole here. But a nice sort of move off these lows would be an important place to go look. Again, if you set up a whole chart list of all of the IPOs, I think there's some value there. So it's a really nice place to go and look. If we are going to get our new market breakout here, this is the type of day we'd want to see it. We want to see big surges up. We want to see a lot of volume hit the tape. And then we want to see some of these, I'll call it risk on assets, really start to accelerate to the top of the list. Other than that, so on the weekend here, what I'd like to point out is as we transition, I'll call it from Friday optimism to Monday, and we start to watch, what we should see is we should see a continuing stabilization of people moving into the riskier assets. So again, moving into not the banks are risky, but moving into the banks and out of these exchanges. All of that spread should continue. I would expect the gold stocks to continue to kind of weaken, maybe not aggressively weaken, but just weaken. And then start to watch for other risk on assets start to turn out. So if we go to the railroads, the point I want to make here is I want to see this trend line in relative strength start to break. And if that was to start to happen, that would be really good. So the exchanges are up probably 1.5% today, and the railroads are doing almost twice as good. I want to see the railroads start to outperform in a big way. Okay, thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern Time, 7:30 a.m. Pacific Time on StockCharts TV. You can also catch the replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting informational shows. And don't forget to sign up for gregschnell.com for the newsletter if you're interested. Thanks, everybody. Bye-bye.